Hey, what's going on? Kunal here, Bulls on Wall Street. I hope everybody's having a great day. I wanted to do a quick video on um, some of the worst trades that I've done in terms of simple mistakes that a trader can make that are preventable, that can often take you from being a winning trader to a losing trader. And so, this week, I had a couple trades that went against me, but they were really for very, very simple reasons and something that are really preventable. And so I wanted to discuss them with you because I think this is some of the stuff that can really make or break a trader, but also separate the great traders from those that just can't make it. And I'm good at this stuff about 99% of the time, but I had about three trades that I really remember this year that I could have just made one or two small tweaks and totally changed the trade from a bad trade to a great trade. The difference, guys, between a winning trader and a losing trader is often just one or two small tweaks. And so, I had this day over here. Let me see, bring up the chart. So, I lost $3,000 on this Nugget trade. So this is a really volatile stock. I lost 3,000 bucks on this the other day, and it was from a very, very simple setup. And so Nugget is a really wild stock. It tracks gold, and so this is on the 16th. And so when I was trading this Nugget, a very, very simple mistake that is totally preventable, but something that you have to do all the time kind of popped up. And so this stock has been really bullish. Okay, this stock's been really bullish and in a really nice trend. And so when you see a gap like this, where it's at 98 bucks and it gaps up, that doesn't necessarily make it bearish, meaning that you want to short it. A gap can often be a bullish thing if treated right. And so I ended up buying this Nugget trade right here at 108 into this flag pattern with this, with the stop at like 107. And this is what we call an opening range breakout. An opening range breakout is a trade that we do every day in our chat room. It's one of the ways that we get into stocks at the open where we can still minimize our risk. And so when this trade flagged out like this, I ended up longing some shares at 108. And as it started to break, I sold some off at 110, a little bit off at 111, and took some profits on it. And then normally, what a sound trader should be doing is putting their stop right at their buy price, okay, to lock in your risk. When you put it at your buy price, you lock in your risk, and so now the rest of the trade is on the house. And so if it keeps going up and you get to 115 or 120, well, now you've locked in some gains, and now you can play the rest for a lotto and have yourself a really nice run. And if it totally goes against you, then you've locked in 2/3, and that 1/3 you'll get out flat. What happened to me was I got a little bit careless. The week before I had been doing really good, and I had some awesome up days where I was making $4,000 or $5,000, and that made me a little bit cocky. And so rather than following my rules and putting in my stop right at the buy price, I let it go. And I just, was playing it to the upside and using it, doing it all mentally. And so then what happened is as the stock started to turn over, I didn't get out flat where I should have got out like right here. What ends up happening is it starts to go down and it goes against me and I freeze because I didn't lock it in and put my stop in. And so now it's just going down, 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 down. And all of a sudden, my nice little gain, it wasn't a huge gain, it was a nice little gain, turns into this big loss. And I end up selling out at 104. And this cost me, thousands of dollars, right? It cost me thousands of dollars, and all from something, or $3,000, all from something that could have been really prevented, which was just putting in a mechanical order to lock it in. And then, in the end, I would have been up 500, 600 bucks, and I would have stopped out the last, 1/3 of it flat, and I would have had myself an okay day. But when I let this thing go against me, what happens is you freeze or you get that paralysis by analysis. Anybody ever have a stock go against them and then when they're looking at it, they're just like, oh my gosh, I hope it goes back up. Let me give it 1 more minute or 2 more minutes. And what happens is those 1 or 2 minutes turn into a lot of dollars. You could see something like this. These are 5 minute candles. This is 5, 10, 15, 20, 20 minutes. This dropped almost $10. Even if you delay for 1 moment, that could be hundreds to thousands of dollars. And so, something to be really mindful of is that as traders, our number one job is to really manage risk. It's not to make trades, it's to protect our profits and protect our capital. And when we can do that consistently, over time, you'll have yourself a career that you have sustaining power in rather than just being some fly by the night. If you look at traders that have been doing this like myself for, 10, 15, 20 years, that's the one thing that they all have in common is that they're always aggressively managing their risk versus just always thinking about the next trade, which is a recipe for disaster. And so, I fell victim to it. It was a lesson learned, but just something to always keep mind of is that once you got profit, keep locking in those gains. Don't give it back because once it comes back, you're never going to just be like, let me admit defeat. It just gets worse and worse and worse as you freeze as it goes against you. So a simple mistake, folks, but something that is easily correctable. And that's the best part about trading is that, it's a rule-based system. And so those type of rules are totally dependent on you. You just got to go out and follow them. Once you learn them in the mechanics, it's literally about saying, hey, these are the rules and I got to make sure to follow them. And then if you can't, then you're not going to make any money. But hey, that's on you, right? Because you just couldn't follow. But it is something that anybody can do at that point because you're really just following your methodology. So that's it for now, guys. Let me know if you have any questions, leave any comments, and I'll see everybody tomorrow. Take care.